and outline plans to pivot away from oil and gas and invest more in low carbon energy, marking one of the most dramatic energy transition plans among its own major peers at a time of deep crisis for the industry. The British energy giant aims to increase its low carbon investments to $5 billion a year by 2030 from around $500 million at the same time as seeing its oil and gas production fall by about 40% from 2019 levels. So let's go through the numbers. Second quarter underlying replacement cost profit used as a proxy for net profit came in at loss of $6.7 billion as expected by analysts polled by Refinitiv. That compared with a net profit of $2.8 million for the same period a year ago. BP also announced a dividends of 5.25 cents per share for the quarter compared to 10.5 cents per share for the first 3 months of the year. So as we can see, shares of BP are down more than 40% year to date. Despite this fact, we do see the stock rallying more than 7%, most likely because of the fact that it's going to face a major company restructuring. We're going to see this, whether it's true or not, a little bit later in the show. But first of all, I want to have a very quick check also on the crude oil price, stuck over there around $40 per barrel for more than 3 weeks already. So far, the US oil is off 1.15% and the Brent 1.03% lower today, $43 per barrel. Fortunately, I'm together with Yousef Alshammari, CEO of Sea Markets. Good morning, Yousef, and thank you so much for joining us.
Hello, Alexander. Pleasure to be with you.
Yousef, I'd like to kick off exactly with a very interesting dynamics within the energy sector. We saw a little bit of earnings, mostly disappointing, specifically when we talk about BP or the British Petroleum, which is one of the most important companies on European level. And we do see a major loss of $6.7 billion. And at the same time, the shares are almost skyrocketing. We did see almost 8% at the very beginning of the trading session. So what's the matter with this, how can I say, different reaction of the stock, seeing what we saw in terms of fundamentals?
As we can see with BP, the net loss being reported, let's say, kind of not surprising given the fact that the COVID-19 crisis mainly was the peak of that crisis actually took place in Q2 of this year. So, as you know, oil prices has a major role to play when determining the financial performance of oil companies. However, what I can see with the BP, there are also some other factors that have contributed to this major loss. If I would actually look at it compared with the performance of other also major oil firms, including Shell. In fact, even Aramco is expected to report its performance later this year, because, as you just mentioned, beginning of the program, the downgrading of its assets, because the forecast that BP has made this for over the next 5 years for crude oil price is around $55, and to us at Sea Markets, the scenario are very bearish. Compared, even not just us, even if you look at some major investments, including JP Morgan, Barclays, they are looking at much better prices compared to BP. In fact, I think, given this, I've had some words with some people who are economists, let's say, economists who are mainly engaged with BP, let's say. And I heard that the company is now currently going into low carbon investments, and that's one major reason why BP is looking at a crude price over the next 5 years at around $55 in a low carbon, let's say, low carbon world. However, if you compare the financial performance of BP compared with Shell, who just reported its financial performance, Shell has managed to make a profit even during Q2 of 2020. Surprising, but Shell has managed to improve its trading arm. And through trading, and of course, because, you know, crude oil price is a significant factor. However, given the decline in crude oil price in Q2, through trading, Shell has managed to make a profit and report a net profit compared to BP. In fact, even Shell is not looking at the same low carbon investments strategy as BP would actually be targeting. And I believe that a major reason for BP is the pressure being exerted from the shareholder. And we've seen that even last year at the Energy Intelligence Forum, that the company was under significant pressure to improve its financial performance. Look at what happened in the UK when the climate rebellions movement happened, and there was so much pressure under the company to enhance its green agenda. Also, if you look back into the last 10 years, what happened in the Gulf of Mexico and the United States, which has also contributed to the need for the company to move green and enhance its green investments over the next 10 years. In fact, even BP is looking at reducing its oil and gas production by 40%. To me, as an analyst, I just believe that's very ambitious. All I think, let's wait and see how these targets. But to me, as an oil market analyst, I just believe these targets are too ambitious. We need, yes, to move green. However, we need to move at a let's say sustainable pace in order not to create an energy crisis in the next 10 to 20 years.
In fact, I was wondering how concerning is this major pivot to green investments coming from most of the oil majors for the crude oil industry?
Well, I believe most oil companies currently are considering low carbon. However, the target or the level of these investments would vary, moving from one company to another. Even in, believe it or not, even here in Saudi Arabia, Saudi Aramco now is considering low carbon investment as a major part of the company's strategy. It has just purchased SABIC, which is a major petrochemical company, and it is now investing in solar and wind and various types of let's say green energy technologies. And that's one strategy for the company to move into an integrated energy firm. If you look at Equinor in Norway, if you look at Shell, Chevron, Exxon, they're all considering the green, the low carbon investments as a part of their strategy, not just to, in terms of, let's say, to have that as a part of their business, but also to enhance its social and climate profile moving ahead. And that's, of course, it's all down to the regulations, because all these oil companies will have to meet certain regulations that could become, let's say, enforced in the near future.
Yousef, I just wanted to have a very quick look also at the crude oil price stuck over there at the current levels for more than 3 weeks. What's the outlook from now on? I'm asking because the situation with the coronavirus, specifically in the US, is getting worse. Certainly numbers are inching lower today, but not just for today. Overall, the situation is critical also in South America and India, Russia, not to mention. Also, some countries here within the EU are suffering a major surge in COVID-19 cases. So this means that transportation is going to suffer even more. And what about a crude oil price? Can we imagine, or can we expect another major shocks as the one we saw a few months ago?
As you just mentioned, the figures that you just mentioned as a possible indication of a second wave of COVID-19. However, I don't think this second wave will be as worse as what we saw in March and April, given the fact that economies now have better experience dealing with the situation. We could see possibly some lockdown measures being implemented in certain countries. For example, in the UK, Boris Johnson has mentioned the possibility of another lockdown if social distancing measures are not strictly being followed by the public. We're already seeing this happening in the United States, where some imposing of lockdown measures have happened. Yet I think the possibility of a V-shaped, smooth V-shaped recovery is not going to happen. Possibly we could see a kind of a W, kind of, let's say, between a W and a V-shaped recovery, moving in the especially in 2020 and 2021. However, I don't think we're going to experience another wave that will be as worse as what we saw in April. Talking about the figures, currently crude demand stands at around 90 million barrels in June. In between June, July, yet we are seeing supplies even from OPEC, which this month have eased by about 2 million barrels. So OPEC this month is going to increase its production by around 2 million barrels. And even with that increase in supplies, we are not seeing prices going down significantly. And there are two reasons for that. The number one is all the increase in supplies coming from OPEC will be used locally, let's say, or at least most of it will be used locally. So exports will not increase significantly. And another reason is that the market currently is looking at mainly how the COVID-19 cases are being reported, and the possibility of the compliance from OPEC countries, because we are going to experience deeper cuts from Iraq, Nigeria, Angola, and especially in Q3 of 2020. And that is all actually factoring into the price stability that we are seeing now. One important thing that the market is waiting for, which is the Aramco official selling price. And if Aramco makes a discount on its crude, that could send the prices up a little bit this week and even throughout August.
Great. Thank you so much, Yousef Alshammari, CEO of Sea Markets. Thank you so much for joining us. It's always fantastic to catch up with you.
Always a pleasure, Alexander. Thanks for having me.
Well, let's talk about the U.S.